As the new financial year brings new tax rules, taxpayers should bear in mind that the deadline for filing late income tax returns for the assessment year 2021-22 was March 31st. If an assessee missed this deadline, he or she will have to pay a penalty and interest and may even face imprisonment for violation. Further, not linking PAN with Aadhaar from today will carry a penalty. Rupees 500 will be charged if it is linked within 3 months from today and Rupees 1000 if done thereafter. Although the PAN will remain operative, linking it to Aadhaar will cost you money, and if left unlinked beyond March 31st, 2023, PAN will become inoperative. Perhaps the most important tax rule that's coming into effect today is the flat 30% tax on gains from the transfer of virtual digital assets, including cryptocurrencies and non-fungible tokens. A new provision allows individuals to file an updated return for errors or mistakes within 2 years from the end of the relevant assessment year on payment of a penalty. Both these provisions come with certain riders. The surcharge on long-term capital gains on all types of assets will be capped at 15% from today. This cap was previously applicable only on listed equity and mutual fund units. Neeraj Agarwala of advisory and financial services firm Nangia Anderson India tells us more.
I think the most critical would be the crypto tax. For any gains which are made on a cryptocurrency, there will be a flat tax rate of 30%. Only the cost of acquisition will be allowed as a deduction. No other deduction will be allowed. Even if you have 10,000 rupees as income, you will still have to pay taxes on it. The threshold limit, the slab rate will not be applicable. You cannot offset losses from one virtual digital asset with the gains of another virtual digital asset. So theoretically, if you make profit in Bitcoins and loss in Ethereum, you will have to pay tax on the profit and just forego or let go the losses. The other important change is there's something called a voluntary return. If for any reason I have made any mistake in my previous returns, I can voluntarily file an updated return. If I do that before it comes to the notice of the tax authorities, then I get immunity from any kind of prosecution or penalty. But of course, when I file the return, there is an additional tax that I need to pay depending on the delay. So if I file the voluntary return between 0 to 12 months, I have to pay 25% additional tax. And if it is between 12 to 24 months, then I have to pay 50% additional tax. Then a couple of other good relief. One is for capital gains. The surcharge on capital gains for listed securities was capped at 15%. Now, this cap is also applicable for all capital assets. So if I sell a flat and the flat was, let's say if I'm making a profit of 10 crores, then I would have had to pay my normal capital gains tax at 20% plus a surcharge of 37%. So now that surcharge is capped at 15%.
Moreover, the interest on an employee's excess contribution over Rs 2.5 lakh to the Provident Fund account will be taxed year after year. The additional interest deduction of up to Rs 1.5 lakh under Section 80EEA on home loan taken for affordable housing project has been discontinued. Higher TDS and TCS rates will be applicable for those who have not filed their ITR for FY21, the late filing deadline for which ended yesterday. Personal finance expert Harsh Rungta explains further.
Fairly big change affecting almost every salaried employee, and this is the change that we've been used to, the Provident Fund interest being completely non-taxable. Now, if the employee's contribution is more than 2.5 lakhs, then the interest on the employee's contribution will be taxed. And for that purpose, Provident Fund account will be broken up into two. There will be one portion that will be the non-taxable portion, and then there will be a taxable portion. So another provision that I want to sort of draw some attention to is the discontinuation of the additional benefit that was available, 1.5 lakhs of interest payable on a loan taken to buy an affordable home as defined in that section 80EEA. Now that will not be available unless the loan was sanctioned by till 31st March 2022. That means earlier, for the higher TDS provisions to apply, you ought to have not filed returns for 2 years. And in both those years, the TDS and TCS should have been 50,000 rupees. Now, the provision is that if you've not filed it for 1 year, you will be labeled as a non-filer, and the higher TDS and TCS provisions will apply even though it's just 1 year.
The taxation regime for cryptocurrencies and NFTs is being rolled out gradually. While the gains will be taxed at 30% effective today, the provisions related to 1% TDS will come into effect from July 1st.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.